watching Fox 25 News at 10.
Back to the markets now, and here's a better look at the up and down ride just over the last week. We put together this chart for you. You can take a look at the ups, the downs, just from last Thursday. Down one day, but back up the next. Some promising news from overseas tonight. The world market's opening higher in the last couple of hours. But what can we expect here at home? Joining me now is David Smith with Rockland Trust. Appreciate you stopping by. Let's start off with the good news today. Why not savor that? Because we don't know what tomorrow holds. But jobless claims down, so that was great.
Jobless claims down this week. Last week we got the jobs data for the month of July, which came in better than expected. The combination of those two things gives some credence to the idea that perhaps the job situation is improving, and it's something that clearly we're looking to see as we try to speculate what's going to happen with the economic situation here in this country.
No doubt. And also, we're getting good earnings from companies still pouring in here.
Yeah, we're about 85% of the way through. We're getting retailers' numbers very recently here, and those numbers look okay. Same-store comps came out last week looking pretty robust, and the outlook looks pretty good. July same-store comps are important because it's a trend line for August and September, which is the back-to-school season, which is the second most important selling season for retailers. So some pretty good data that's coming through when you look at the fundamental data.
And bargain hunters have been out there on these big, steep drops that we've seen recently, correct?
Without question. You know, the volatility has been amazing. The chart you showed a minute ago shows a lot of ups and downs, but the aggregate result of all that means the S&P 500 is down about 2.7%.
Right.
That doesn't feel all that bad if you just give that number, but when you look at what happened, 400-point drops make people very uncomfortable.
Extremely high volume, too.
And very high volume, which is unusual in the summer, particularly in August.
Let's talk about European debt concerns and those types of things. Also, Washington. It seems to me the markets want to do their thing, but they're being bogged down by these pressures from the outside, are they not?
Without question. Headlines are driving the market today. It is amazing to see the headlines that are coming out of Europe and many of the rumors. There was rumors floating around yesterday that one of the major European banks, particularly a French bank, was going to go under. That was completely rumor, but it caused the stock in that particular company to go down so much that the European regulators came in today and put a restriction on short selling to try to control some of the pressure on these companies. So
and again, it's bears watching, making sure they're doing their homework. And the same thing for people who might be thinking of investing, but really a tough time right now. Maybe let the experts get involved, but you stay out, right?
Yeah, I mean, I think that's, obviously, as a practitioner, I would say that's probably always the case. But you have to be very, very careful not letting your emotions drive your decision-making process. And in these times, both in times of tumult like we're in today, and in times of good market environments like we were in just 6 or 8 weeks ago, extremes drive emotions, and emotions sometimes lead to irrational decisions when it comes to investing.
Very good advice. David Smith, appreciate it. Thank you.
Thank you for having me.